This is the US interest rate, and with a higher US rates, the US dollar should be trading higher. But what we're seeing here is that the US dollars became weaker since September last year. And why with a higher US rates, we should be seeing a stronger US dollars? The reason is because many savers and investors, including the foreign investors, may sell their currency and deposit or buy into the US dollars just to earn a higher interest. But what we're seeing here is that with a higher US rates, we're seeing a weaker US dollars. So what is happening? And in today's tutorial, we'll discuss what is the cause of this weaker US dollars and the future of the US dollars, despite that the US interest rate could go higher than expected. And before we discuss about this topic, please do take some time to read into the disclaimer. In September 2022, it was a very significant month. Why? Because the height of interest rate became more intensified. And let's do a recap what happened to the interest rate over the last many years. And we could see that the interest rate maintained at the ultra low position at about 0.25% for many years. And it climbed to 2.5% in 2019. And of course, in 2020, we have the COVID-19. Then subsequently, inflation started to pick up. But it took the US Central Bank many months to decide on their first hike in March 2022. And then followed by that, the inflation started to creep up even more. And it come to a point where the inflation hike break above this 2.5% on the September 2022, and this became a point of reference. So earlier also discussed about with a higher interest rate, it should bring attractiveness to the US dollars. Now let's look at September 2022. But what we're seeing here is that it is a turning point of the US dollars. The dollar index got weaker after September 2022. And what's happening? And let's look at another example here is that we're looking at the Swiss franc futures. And when Swiss franc futures move higher, it also means that Swiss franc is appreciating against the US dollars since September 2022. And of course, you can reference to the pound and euros, you will get a very similar reading since September 2022, with the increase in US interest rate but a decline in the US dollars. Now, question is, why is it so? Why are we seeing a weaker US dollars? I believe that the key reason is because of the bonds market. And we are seeing here, this is the bonds market. We're seeing here is that all these bonds market, whether is it 2 years notes, 5 years, 10 years notes, or 30 years T bonds, they are all priced in the US dollars. And since April 2022, we could see here is that the bond prices all over have transit from an uptrend to a downtrend. And bond has been selling off since then. And my explanation is this. As long as the bond continue to trade lower, and since it is priced in US dollars, we should also be seeing a weaker US dollars, despite a higher US rate. And how big is the US bonds market? From my personal understanding, it has exceeded 30 trillion US dollars. And this is a size comparable to the size of all the US stock market combined together. And therefore, this turning trend down here in the US bond, to me, it is very concerning. And before Fitch rating downgrade the US bonds from triple A to double A plus on 2nd of August this year, we had discussed this in April 2022. And then we have uh, did a projection on our tutorial. Back then was 8th of July last year. So we have discussed that the good times for the bonds that was last year seems to be over because you have broke below this downtrend line. So it freezed here on 8th of July 2022. So that was our expectation. And today we could see that the bonds continue to move down. And I'm using the T-bonds and the rest of the notes market very effectively to trade on this downtrend. So in the past was as a trend along this uptrend. Now as a trader, I will buy on dips. But moving forward, since last year, as it broke below this uptrend line, means that you transit from an uptrend to a downtrend. As a trader, I will sell into strength. And I'm also using this T-bonds market to hedge into many other positions as well. Let's go back to our first slide here. So what is your take on this global inflation that we're all in today? To me, it is not ending anytime soon. And with this notion that US interest rate could go higher than expected, but the US dollars may not be stronger because it is being sandwiched between a higher interest rate and a lower bond market. This is what I would do. I will continue to monitor all these notes and bonds, deploy them as a hedge or to trade directly into them. I always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing it will be helpful in how we invest and trade. Feel free to leave me any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.